all of these countries appear to publicly be accumulating silver under the guise of industrial use. It's not industrial at all. You got David Bateman, a billionaire, who said he took hundreds of millions of dollars worth of silver, took delivery of it, and said a 10% shift in people buying gold to silver would consume every ounce of newly mined silver globally, making it a massive silver squeeze. He's right. And it's funny, for a long time I used to say that you and I and the people that we talk to represent, the pimple on the elephant's rear end, and the respect that 0.5%, these were my words always, 0.5% allocation from Joe and Jane Sixpack to the Harvard Endowment Fund own gold. Well, guess who just took possession, or who just purchased $101.5 million in GLD, which is the gold trust administered by JP Morgan and BlackRock. The Harvard Endowment Fund just bought $101 million worth of gold.
Because they know.
The big money knows. The big money is closest to the information. And that's the thing. They're the largest, to my knowledge, the largest and most influential hedge fund on the planet. And it's obviously very politically connected because they are, like I said, they are intertwined. They own all of the companies that manufacture the military equipment. So they, in essence, are the military industrial complex. At the same time, they're the ones who are the custodian of SLV, the largest silver trust in the world. So when you talk about why has silver been held down for so long, I would argue it's because you need it to make high-tech weaponry. We've talked about this for a long time, and they do. There's 500 ounces in the tip of every cruise missile, Tomahawk, Hellfire. They hold down the price, and it's not even about price as much as it is that everyone would buy it if they knew what it was really worth. To make these weapons, they sell the weapons all around the world. They blow up places like the Ukraine and Syria. Then BlackRock comes in under the other side of their company, and they get the reconstruction contracts. They're very connected. They're very influential, and they're tied into the most powerful people on the planet, the manufacturers of military equipment and the people that make the rules. This is the military-industrial complex. They are very, 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 very powerful. And so I'm assuming it was... there's more to it than meets the eye. Whoever comes and takes the place of Lisa will be a Trump bobo as well. Will do what Trump is asking to be do. So lower interest rates and weaken the dollar more. That's what they want. But that's what got us in this problem to begin with. So while it will help the government finance its debt, it ain't going to help the younger people. This is the poorer people. This is the Cantillon effect in action, which says the people closest to the money benefit disproportionately. So in that environment, the wealthy, their assets go way the hell up, and then they decide to go buy a new Porsche and take a new trip. Well, when that money is spent, it trickles on down through the economy, and by the time it gets, the velocity of money, by the time it gets spent from the owner of the Porsche company down to the local restaurants, down to the local Targets and Walmarts, by the time it gets spent down to the average person who has access to it now, it's been inflated, and that's the whole point. Look at it this year. We've seen massive money creation this year, and the dollar's down 11% over the past 7 months. Well, gold's up 40. So if you own gold, you are benefiting disproportionately to those who don't, or any assets, crypto or stocks. They're all way up. So you are benefiting. The people who don't have assets aren't, because by the time they get to use it, you bought all sorts of stuff with it that went way up. And when you sell it and put it into the real economy and it trickles down, well, it just comes back to these people in the form of higher food and energy and costs.
40-plus year cup and handle formation. From a standpoint of technical charting, technical analysis, that's as strong as it gets. Clearing 39 or touching 39, not only in spot this morning, but in the futures market last week. That's the strongest showing, as you mentioned, since 2011. The resistance that we see that it cleared was the $37 to $38 range. And that sets the stage for, certainly, in fact, I wouldn't be surprised, and I hate even saying something like this, but I wouldn't be surprised to see it go through 40, 41 this week. There's very, very little resistance at these levels, because if you look at the so-called resistance, it had traded at those levels for not more than a day or two on its way, up and down, which were very quick. And so that is to me not really resistance. It's mild resistance at best. You look at the gold to silver ratio, which is still massively elevated. Last I looked last night, it was 92. That's historically a massive bullish signal for mean reversion, as it's called, where you revert to the mean, where, the average price for the past 150 years, that ratio has been about 42 to 1. That's man's price. That's man's ratio. God's ratio, or the mining ratio, is roughly 7 to 1. In fact, I just saw Keith Neumeyer at the Rule Conference last week. And again, he says, it's coming out of the ground at 7 to 1. Now, you have all these fundamental drivers that people are talking about: clean tech, electronics, monetary demand. Of course, you also have the defense demand that we've talked about before. These are all tightening fundamentals. And what's really different, aside from the technical breakout, the seasonal tailwinds, the strong fundamentals, all the things that you'll read in Bloomberg, to me, is that we are seeing massive deliveries on COMEX and on the LBMA. In fact, we're seeing big deliveries off the Shanghai Exchange. You're seeing a demand for physical delivery that is very unusual. The largest deliveries in the history of the COMEX in May, and then again in June, huge deliveries. You're talking massive, massive, massive change where you're seeing it might be the second largest. I think the one Warren Buffett delivered all of his silver to the COMEX for SLV, I don't know how many years ago. That might be the single biggest. But if I'm not mistaken, the May delivery was the second largest delivery in the history of the COMEX market. Now, who's doing all of this? And that, to me, is what's very different. You look at the LBMA, which is a T+1 settlement market, Jesse, where T is the trade day plus 1 settling. The third day, the bar should be moving. Well, they've been on a T+8 week settlement for quite some time now, 4 to 8 weeks, typically longer than the 4, closer to the 8. And they cite a shortage of manpower and trucks. Well, what that really is being caught with their pants down. And you take a look at their supply numbers. They have the lowest float that they've ever had in the history of the market since they've been keeping records. This is a 140-year-old exchange. I don't know how long they've been keeping records, but it's the lowest float, somewhere around 170 million ounces. So if you realize they have about 750 to 800 million ounces there, that means that the rest of the silver, minus 140 or 50 million ounces, belongs to the ETFs primarily, like SLV, who, ironically, BlackRock and JP Morgan are the primary custodians. Don't get me down that path. But when you realize that, according to David Jensen, who does a marvelous job at analyzing the LBMA, that they're trading upwards ends of 1.9 billion ounces per day, which is 3.5 times annual global mine supply. At the same time, it's, in this case, about 12 times the float. So they're trading paper. And what differentiates this market in both gold and silver, in my mind, you could say the same thing about platinum, is that you have massive volume and massive deliveries. And no one ever stood for delivery. So it's kind of like Bernie Madoff, who everyone thought ran a great shop until people said, we need our money. And then you begin to see cracks in the system. Well, you could argue that's where we are right now. When the LBMA shifts to a T+8 week settlement from T+1 and citing a shortage of trucks and manpower, well, what could possibly go wrong? So yeah, I think that we're on track for further gains. I would not be surprised to see $50 later this year. I wouldn't be surprised to see $40 later this week. So yeah, there's a lot to be excited about in the silver market. I think the fundamentals are insane. And I think more than anything, and I've cited this before, there's a lot of talk of the BRICS meeting we just had, and there was more talk of the BRICS grain exchange. And the gentleman running the grain exchange, Jesse, said, we produce and consume more grain than they do in the West, but we can't control the price. That's controlled on COMEX. But with the development of this new grain exchange, that will change. So they know what we're doing with all of the commodities, from grain all the way up to platinum and everything in between. And they've been using that against us by standing for delivery across the globe. And I believe that this isn't going to change. You take a step back and then you look at a bullish figure. And I don't mean to answer this question so in depth, but I think it deserves it. After all of these years of waiting for the breakout, you look at China They're the second largest producer in the world. David Morgan, if you ask him, would tell you they told him, the Chinese did, that they're number one when he did a tour there of some mines, but they're listed as number two. Second largest producer in the world, and yet Sean Kuhn from Dolly Varden, if you ask him on air, he'll tell you that they're flying all around Latin America, in particular Peru, the Chinese are, buying doré and concentrate directly from the mines, disintermediating the marketplace, and sending it back, paying double what the West was, sending it back for refining in China. Now think about it. Why would the second largest producer in the world, or maybe the first, find it necessary to buy doré and concentrate, way outpricing the market for it, and then sending it all the way back to China to refine it if it was just a commodity like we are led to believe? And I think you look at the folks in Canada, some of the banks and the mining companies who are petitioning Ottawa to reclassify it strategic from industrial, and you see the moves that countries like Russia making it part of their strategic stockpile, India buying 900 million ounces in the last 5-6 years, China flying all around the world to get it, and deliveries burying the COMEX market to the lowest float in history ever, or the LBMA rather, and then COMEX delivery, largest deliveries in the history of the COMEX market, seems every single month. So you're seeing what I believe is perhaps a rewriting of the silver narrative, where this game of naked shorting is an existential threat to some of these players. And I think you're seeing the commercial banks wake up a little bit to the reality that this is a game that cannot be played anymore on a naked basis, meaning shorting without the silver behind it, in order to control the price, because the rest of the world has become coordinated, motivated, sophisticated, wealthy as hell, and they know what we're doing, and they're standing for delivery, and that is how the game ends. Jim Sinclair always said, that's how you beat them, stand for delivery. Well, it's one thing when you and I try to stand for delivery and even take something off of COMEX. It's another thing when you are seeing billions of dollars worth come off the exchanges every month, when you're seeing the biggest money in the world, who is not only the biggest money, they're the most well-informed traders on the planet in what is a very sophisticated endeavor, and that is to drain the world's exchanges. It's just beginning. I do believe silver will go on a run, a slingshot run, that will surprise even silver bulls, especially when you compare it to gold's performance. It's following suit just the way it normally does. Gold leads the way. Silver slingshots past it on a performance basis. And if we close above $41 an ounce, I mean, the sky's the limit. There's virtually nothing between it and 50. You get through 50 and it's nothing but blue sky. It's the same thing when gold closed above its previous peak of 2,200, and here we are, 3,300 and change very quickly. So I expect this to be an epic run for silver. Could we still see some volatility? Absolutely. At these numbers, sure, you'll see some volatility, some bouncing around, some corrections, but ultimately, because it only lasted a day or two, literally at the next resistance levels, to me, it's not even really resistance. So yeah, I think there's a lot to be excited for in silver. I really do. Standing for delivery ends the game. When silver went past 38, Jesse, this isn't retail demand or industrial demand, as Ed Steer says, who's a very smart man who's carrying the torch for Ted Butler. This is short covering. I agree. You see exploding exchange for physical spreads and rising open interest and increased volatility. This all points to big players getting squeezed, as far as I'm concerned.